Hello everyone and happy Friday. I'm Aaron Sachs. I'm a senior manager in our Hillsborough office and a leader on our nonprofit team. I want to welcome you to our presentation today, Planning for a Successful Audit. Today I'll be presenting with fellow members of our nonprofit group, Brooke Lomica and Tyler Weber, and we'll be walking through the audit process, sharing tips and best practices to help you prepare to get the most out of your audit. All right, first, a little bit about Jones Roth. Our firm has been serving clients in the Pacific Northwest for nearly 80 years. We have 3 offices across Oregon and a team of about 100 members. Our team is niche focused, which allows us to specialize in industries to serve our clients with the technical expertise of a large firm while providing the quality service you'd expect of a local firm. Our nonprofit group is one of the largest in the firm. We have a diverse team of CPAs and business advisors dedicated to serving our nonprofit clients. All right, now to introduce my fellow presenters today, Brooke, we'll start with you.
Hello, my name is Brooke Lomica and I am a manager in our Eugene office.
I'm Tyler Weber and I'm a manager in our Hillsborough office.
All right, thank you both. Without any further ado, we will go ahead and get into the presentation. All right, let's first look at the agenda and take a quick look about what we'll be covering today. So we will be discussing the audit process, including responsibilities of the auditor and the organization. We're reviewing the phases and milestones in an audit and what you can expect. Our goal here is to take any mystery out of the process. Next, we'll be diving into the preparation for an audit. So how can you ready your organization for a strong start? We'll then want to give you some tools for success while the audit is actually in progress. So we'll be identifying best practices and some common pitfalls that you'll want to avoid throughout the process. And finally, we'll discuss concluding the audit and what comes next after that. Please feel free to submit questions that you have throughout the presentation. Be sure to use the question function on your screen and not the chat feature. If you use the chat feature, it will go to the entire group, so everybody attending. So please be sure to use that question, not chat. We have a team member that's monitoring those questions and we'll do our best to address those as they come in. If for whatever reason we can't get to your question during the presentation, please feel free to reach out after the presentation and we will get back to you. All right, our audit's designed to complicate your life. Let's set the stage. It's time for the annual audit again. But how? It feels like you just finished up last year's audit. You're juggling program deadlines, grant reporting, not to mention the day-to-day, and of course, everyone's favorite, the special projects. The audit feels like a burden, another task piled on top of many others. Stress builds, time disappears, and the whole process feels more like a test than a resource. But I'm here to tell you it does not have to be that way. So today we're hoping to provide you with a whole new view on the audit process and share the tools that are needed to set you up for success. All right, we will begin with an understanding of the audit process itself. So what exactly is an audit? An audit is an independent assessment of your annual financial statements. Are the amounts presented accurate? Do they include all of the required disclosure notes? To be an independent assessment, the audit must be conducted by an unbiased, impartial external party. This is where your auditor comes in. The auditor's report that accompanies the financial statements will express an opinion on the fairness of the information presented. It's telling the reader of the financial statements that they're materially correct. So what value does an audit provide? Yes, it provides you with an audit report, but it's more than that. A clean audit signals transparency and fiscal responsibility to donors, grant makers, and the public. It reassures stakeholders that the organization is managing its funds ethically and in accordance with accounting standards. An audit can also identify opportunities to strengthen internal controls and provide recommendations for improving processes. When taken seriously, an audit can help the organization be more resilient and address issues proactively rather than reactively. So it's a lot more than just a report, even though that's the physical outcome that you get at the end, obviously your audit report. All right, so let's look at what the auditor's responsibilities include. The key objective of the audit is to issue an opinion on the financial statements based on the evidence collected during the audit. The opinion indicates that the financial statements are free from material misstatements and fairly presented in all material respects. The auditor will also assess the risk of fraud and design audit procedures based on those risks. However, detecting fraud is not a primary purpose of the audit or a responsibility of the auditor. So engagements that are designed for this purpose for detecting fraud would be typically a forensic audit, and that's a lot more narrow in scope and typically performed by a certified fraud examiner. So a little bit of a different specialized purpose for that. The auditor will also present the key findings of the audit to the board and management. So this includes any concerns or significant matters that came up during the audit process, during the testing. So now, what do the auditor's responsibilities not include? So the auditor is not responsible to reconcile accounting information or compiling of data for the organization. Doing so could actually impair the auditor's independence because, in essence, they'd be auditing their own work, right? However, the auditor providing assistance as an additional service or convenience to the organization is allowed in some limited circumstances. So some common examples of that might include maintaining depreciation schedules based on information provided by management. So management's determining the useful lives of the assets and so forth. Also assisting with the implementation of new accounting standards. That's another example of one of those additional services that can be done with some safeguards. So the auditor is not responsible for the preparation of the financial statements or disclosure notes. This can, however, be done by the auditor as an additional service, just like the others I mentioned, so long as that management takes responsibility for those financial statements. So the key here is that certain additional services can be provided. They just can't impair the auditor's independence, and management has to be able to understand the services they're being provided and be able to take responsibility for them. Let's look at what the organization's responsibilities include. Management is responsible for providing the supporting documents and schedules used in the auditor's testing. There must be unrestricted access to information. So while that might sound a bit intrusive, it's really a necessity in order for the audit to remain independent and objective. If information is withheld, then that's truly not an objective opinion as a result of all the procedures that were performed. So the organization is also responsible for designing and implementing internal controls over the financial reporting process. The purpose of these internal controls should be to prevent or detect errors in the statements and financial records. Preparation of the financial statements is also the responsibility of management. They are management's financial statements, with, of course, the exception that we discussed on the previous slide, where it can be done as a non-attest service. All right. This flow chart is going to illustrate the key phases of the audit process. So the process begins with a discussion between the auditor and the responsible individual at the organization. This is going to be discussing key dates, logistics, and expectations that are agreed to at that point. The engagement letter is also signed at this stage. Next, the initial request list is provided by the auditor. Other pre-audit tasks such as preparation of letters to confirm account balances with third parties also happen at this stage. Then we move on to the actual testing itself, where the field work could be on-site, remote, or some combination of the two. The auditor will have follow-up questions and requests, often referred to as open items lists. If you've heard of that before, quite familiar term. Next step is also during the audit process. The actual testing is concluding here, and the financial statements are being drafted. If the auditor is drafting the financial statements, the draft will be presented to management and the board for review and approval before they are finalized. And then we reach our final stage. This is where the audit report is issued and the required communications to the board and management happen as well. So really you can break it down into three areas here. So we'll be diving into each of these in a little bit more detail. Pre-audit, during the audit, and then conclusion. So first we're going to zoom in on the initial two steps from the prior slide. So this is the pre-audit phases. This is a critical time as it sets the stage for the rest of the audit. It should always include a discussion of key dates and deadlines and what future communications will look like. It's also very important to determine when the accounting records and other initial request items will be ready. The audit testing can't begin until all the necessary items are received. So really this is a critical piece to moving on and actually beginning the testing, and can impact the end dates for the completion of everything as well. So now we move on to the next two phases during the audit. So this includes the execution of the audit procedures. It will include inquiries of management, follow-up requests, and may also include confirmation letters. As we mentioned, those would be prepared in the first stage, the pre-audit. This is where they would actually be sent out to third parties to confirm balances, any follow-ups that are required there. And then also inventory observations, if that is a significant area that is going to be tested. The financial statements are also drafted near the conclusion of the testing, once procedures are substantially done. So finally, we reach the last stage, the conclusion of the audit. So the drafted financial statements are now presented to the board and management. Significant audit matters are communicated, and any control-related matters identified in the audit are addressed. So this is where the auditor will provide a representation letter to be signed by management. Among other things, this letter is an acknowledgement of management's responsibility for the fair presentation of the financial statements, and also the design and implementation of internal controls over financial reporting. All right. Next, we'll be discussing audit readiness and how you can best prepare your organization. Tyler, I will go ahead and turn it on over to you.
All right, thank you, Aaron, for providing that information to begin gaining an understanding of the audit process. Next, I would like to go over some key areas that you can keep in mind while your organization is preparing for your audit in order to get off to a strong start. So as you are going through the initial planning phase with your auditors, a good starting point is going to be establishing a timeline for the engagement. This is typically done by starting with when the audit report needs to be issued by and working backwards from there. It is important to know if the organization has any grants or potential loan covenants that require audited financial statements to be furnished by a certain date. Similarly, there could be statutory deadlines such as the 9-month due date for federal single audits that need to be kept in mind when determining when the final audit delivery needs to be by. Once a due date has been established, you then want to take into account the timing of board or finance committee meetings depending on how the organization is structured. It is best practice to have the draft audit presented to these governing bodies for their review and approval. You want to identify the meeting dates occurring prior to the final due date for your financials in order to give the management and committee members adequate time to review the drafts, discuss and make any potential changes, and then have the draft report presented by the auditors for final approval, depending on the process that's in place. The final piece of establishing the audit timeline is going to be determining when the initial request lists are due to your auditors. We'll go into further detail on the initial request list here in a few slides. However, the due dates for these initial request items determines when the audit can get underway. During the planning discussions that you're having, you also want to keep in mind any potential planned time off that could impact the audit timeline or flow of information during the engagement. If there are any known periods of time where key team members who are helping furnish audit requests will be out of the office, whether it's due to time off, holidays, or potentially other planned personal reasons, you want to keep this in mind and communicate that with your auditors at the beginning. This helps to manage their expectations of when to request certain items and the timing of when responses may be provided. In practice, I commonly see these types of timing items pop up, especially during November and December, with all the various holidays and New Year's all following within about a month and a half of each other. Having those conversations early in the process is also appreciated by the audit team and helps them to schedule their staff time accordingly to ensure adequate time is reserved in their schedule to work through your audit. To keep track of these important due dates, a good tool that can be used is Outlook Calendar. You can calendar these due dates and set reminders for yourself. I tend to put these due dates on the calendar and set a couple weeks out to a couple months out just to get that reminder. And then when these pop up, it helps me to recall the timeline and assess where we're at in the audit process and determine if we need to have any potential discussions on the timeline based on what the current status of the engagement. So once a timeline of important dates has been established, you next want to think about the logistics of everything. Internally, you want to establish who will be the main point of contact for the audit. Generally, this is going to be a finance director, controller, or accounting manager who has a good understanding of how the financial operations of the organization are run on a day-to-day basis. This individual will have the ultimate responsibility for the audit and the flow of information, and they will also be in charge of delegating tasks to others on the team to ensure accountability and ownership of the entire process. The individual who's designated as the main point of contact should also communicate with their auditors on their communication preferences. Communication styles can vary from person to person, so ensuring these channels are set up in a way that is comfortable and effective is a key to the smooth flow of information throughout the engagement. Weekly or bi-weekly audit check-ins can also be established to go over any potentially challenging questions that may arise and to provide an overall update on the status of the engagement and the timeline that was set. Now that the timeline and logistics have been set, it's time to start discussing where your work for the audit begins. Your auditor is going to provide you with an initial request list. This is going to be a listing of all documents that they will need in order to begin their audit planning and procedures. This listing generally will include requests for fully adjusted trial balance, general ledger detail, bank reconciliations and related statements, accounts receivable and payable agings, minutes to any board meetings that were held, and any new grant agreements entered into during the year that are impacting financial performance. Another key request here is going to be signed confirmation letters that need to be returned to your auditors for them to facilitate sending those to the third parties. These are all integral parts of the audit planning process, so it's important for you to review the initial request list as early as possible. This helps to identify which items will be easy to provide versus those that may require a little extra attention and time. This initial request list also is a good time to start dividing up the list and assigning pieces to various individuals on the team that are going to be helping you pull information together. Having these requests provided to your auditor by the agreed upon due date is imperative to the audit timeline, as the audit cannot get underway until these initial requests have been provided to them. Being a week or more late with providing these requests can have an impact on the delivery of the final product, as the auditor generally has time blocked out on their staff schedules months in advance to work on your engagement. Any delays in obtaining this initial request can potentially cause scheduling conflicts for the team, as hours have to be rolled forward. Now, let's say you're having your first ever audit, or potentially you changed auditors and you're unsure what some of these initial requests are being asked of you on this listing. This would be a great opportunity to reach out and have a conversation with your auditor. During these calls, you can discuss any questions you may have, or potentially show them documents that you have on file that you think may be what they're asking for, just to make sure everybody is on the same page and that the support that's being provided is what is actually needed for the audit. This also helps reduce additional open item requests later on down the road. And if this isn't your first rodeo, keeping a copy of the prior year request list on hand can also be very beneficial. The initial request lists generally have minimal changes from year to year, so if you find yourself with some free time near year end, but you haven't yet received the request list for the current year audit, having this prior year list to look back on can be beneficial to you to review and start pulling together information that was requested of you in the prior year in order to get a head start for the current year audit. So you've received your initial request list, split it up amongst responsible individuals, and you're ready to start pulling the information together. This would be a great time for your team to have an internal meeting to briefly go over the purpose of the audit and what everyone's roles are going to be. We know that everybody is busy in their day-to-day roles already, and adding an audit can potentially create stress and additional work to complete. Sharing why the audit is important and how a positive result can boost the organization in a positive manner can help with the team buy into the process. Team member roles and expectations should be clear and communicated with everybody who's going to be helping out. Communicating your appreciation for staff contributions also helps to boost staff morale, creates a sense of contribution to the overall audit process, and keeps information flowing in a timely manner. As you're going through the initial request list, you want to identify significant account balances and transactions. Careful attention to these areas should be paid, ensuring the financial records are complete and fully reconciled. Areas of focus tend to be the cash disbursements and receipt cycles to ensure transactions are properly accrued at year end in the correct accounting period. This is also a good time to compare internal financial records with external documents to identify any potential errors and correct discrepancies as they may come up, such as in reconciling your bank accounts, loan principal balances, and interest expense for the year. Another area to keep in mind is reconciling fixed assets, accumulated depreciation, and the related depreciation expense. If your auditor maintains your fixed asset schedule as a convenience to you, supplying them with a listing of fixed asset additions and disposals is important to do during this year-end close process. Providing this early on will allow them to update the depreciation schedule for you and get you a new, fresh copy for the year, which then you can then use to reconcile your books prior to sending the adjusted trial balance to them to begin audit procedures. To ensure all significant areas are reconciled at year end, you can also consider developing a year-end closing checklist if you don't have one already. This can be used to check off that all areas have been reconciled and reviewed and that major transaction classes have been addressed during your year-end close process. A quick self-review of your work and the work of others can also be a proactive way of identifying any unusual balances or variances or other potential issues that could be addressed internally prior to submitting your audit documents to your auditor to begin the process. As you are going through your year-end close, you also want to keep in mind estimates and allocations, as these play a crucial role in accurate financial reporting. These items are the responsibility of management. They should be developed based off of management's judgments and available data to them, and the process used to arrive at these conclusions should be documented wherever possible. An overall framework for how these estimates and allocations are being determined by management is often outlined in written policies and procedures that are used. Common examples of estimates and allocations include depreciable lives of fixed assets, the functional allocation of expenses, determination of the allowance for uncollectible receivables, and any estimates used in determining your lease right of use assets and liabilities under the new lease accounting standard, and potentially also the fair value of donated goods or services that should be recorded to your books as in kind. It is important to keep in mind that even if your auditor is maintaining your depreciation schedule as a convenience to you, management is ultimately responsible for providing them with all of the necessary information in order to update those schedules, including the depreciable lives and methods, in order for the auditor to update that schedule on your behalf. So as we're nearing the end of this audit preparation segment, there are two other areas that I want to touch on, with the first being organization. If not already done, your organization should want to maintain its financial records and documents in a system that allows you to easily locate what you need within it. Or if you're unable to find a document or you're out of the office for a certain period of time, others with a reasonable amount of knowledge should also be able to locate that document when needed to help keep the audit flow of information going. Files internally should be labeled in a clear and consistent manner. It is also a big help to your auditor if files that are provided are clearly named and identifiable without having to open each document in order to determine what it is. Oftentimes, initial request lists that you're provided and subsequent open items lists will have request numbers or references next to them. When pulling your support together to submit to your auditors, they will love you if you also include the related request reference at the beginning of the file name. This helps them to also stay organized and identify any potential missing information from a request list sequence. This can also be a beneficial tool to you as well as you're pulling information together to sort them by file name to see if there's any breaks in the sequence and potential information that has not yet been pulled together. You can stay organized and get ahead on this process by creating a pre-audit file for items you know historically have been requested of you. These can include new or modified agreements, any policies or procedures that were updated during the year, copies of revised governing documents such as bylaws, supporting documentation for unusual or complex transactions that were worked through during the year, and copies of board minutes for meetings that were held during the year. The last area that I want to touch on during this audit preparation segment is any big rocks that may come up. These would be any new programs or activities that the organization undertook, complex accounting issues that were worked through during the year, or potentially major asset acquisitions that occurred, just to name a few. These should be communicated with your auditor at a minimum of during the audit planning call. However, it would also be a good practice to keep them in the loop throughout the year as these items are taking place. Especially, this is important if your organization is subject to a federal single audit and perhaps receive funding under a new or different assistance listing during the year. It is important to communicate that in case it adds additional major programs that need to be tested or potentially a new major program that's going to be tested that hasn't historically been. If a new accounting standard is applicable to your organization and it needs to be adopted, having these adoption conversations early is also encouraged to begin working through the process before the audit begins. Having these discussions before the audit will put both you and your auditor in a better position to handle any related accounting issues that may arise. So now we've discussed pre-audit planning and how to be prepared to get off to a strong start. Next, Brooke will be sharing tips for while the audit is in progress.
Thank you, Tyler. As Tyler mentioned, I'm going to start by discussing some audit best practices and common pitfalls to keep in mind throughout the audit process. Some of these Aaron and Tyler have kind of already touched on, but they're just things we want to emphasize as you're preparing for any upcoming audits. So let's start with best practices. It's really easy to get excited and think you're about finished with all audit requests after you tackle that initial lengthy information request list. But your auditor is absolutely going to have additional requests and follow-up questions beyond that initial list. As auditors, we do try to make that initial request list pretty comprehensive, where we're requesting most things we know we're going to need for the audit. But there are follow-up questions as we start testing the transactions on those schedules that we request with that initial list. So don't be alarmed when you're getting some follow-up open item lists. As Erin kind of mentioned, those secondary lists that come after that initial request list, they're often referred to as open items. So don't be alarmed if you hear that language. As an auditor is making those follow-up requests or open items, don't be shy about requesting a quick phone call, Teams meeting, or Zoom meeting to discuss some of the information requested. A quick discussion can be really helpful for items in which maybe there's a lengthy explanation or response, maybe you're unclear of what's being requested, or if you have any clarifying questions. Often we can save quite a few back and forth emails with a quick 5-minute phone call. As an auditor, we understand that responding to our questions can be a really time-consuming task for you and your team. But the quicker you can respond to those questions and requests, a lot of the time, the quicker we can complete our testing and wrap up the audit. Don't feel like responses need to be provided all at once as kind of you're working through those open item lists. Feel free to upload responses in batches or groups as you work through the list, and that will allow our audit team to continue progressing on the audit as you continue pulling responses. I know it can be a lot, so batches are definitely helpful to kind of keep things moving along. And then the auditor's expectation of turnaround time on those lists can vary quite a bit depending on the number of questions on the list and the number of open items and any relevant deadlines to the audit. So feel free to ask if you're not sure about what the expected turnaround time is. I know it can be really frustrating for all parties if the auditor is expecting to receive all responses in 2 to 3 days, but maybe as the auditee, you know you're not going to be able to respond for a week or more. And same thing if it's the other way around. If you work really hard to provide everything on that list in 2 days and then the auditor can't touch it for a week, that can be really frustrating on both sides. So don't hesitate to ask if you have any questions or you're not sure kind of what the expected turnaround time is and what the timeline is expected to be. When possible, it is also really helpful if you can provide detailed responses to your auditor's follow-up questions, even if it might take a few extra minutes of your time. As auditors, we see kind of little bits and pieces of a lot of different clients and a lot of different industries, lots of different accounting applications. So we're not always experts on your industry or your systems. So if there's any acronyms that are maybe coming up in your responses or any unique reports or other information that's really specific to your organization or industry, your auditor will really appreciate a little extra context with some of your responses. And that can really save some back and forth follow-up as we're trying to kind of comprehend some of those explanations. So a little extra context can go a long ways as you're providing those responses to audit questions. And continuing with our best practices, as always, we really appreciate open and proactive communication, as this can really increase the efficiency of the audit. Upfront conversations can save quite a bit of time in the long run. If your organization has had or is having any actual or potential legal issues, that's something we always ask about in the audit, please communicate those as early as possible. Additionally, if there's any communication with regulators or other authorities, please share this information early, as that can help keep delays from popping up later in the audit. And then circling back to our phone calls bullet point from the last slide, don't be shy about setting up frequent check-ins and updates throughout the audit. And don't be alarmed if your auditor is frequently checking in with you. Over communication can be a good thing, especially when there's kind of some deadlines on the line. So if you anticipate any changes to the audit timeline discussed during that initial preparation phase of the audit, please let your auditor know as soon as possible. As Tyler mentioned, we often have a team of staff kind of scheduled and dedicated to working on that audit for specific weeks. And if there's significant delays, that can cause some conflicts in our schedule, and then that can ultimately delay the audit. Moving on from best practices, let's transition down to some common audit pitfalls. So as part of an audit, your auditor is going to request documentation surrounding your organization's financial processes and internal controls. Do not underestimate the importance of detailed internal control documentation. Often we see that this information just gets rolled forward every year without a detailed review or update. It's not uncommon at all for us to ask about updated control information and we get a response of, oh, it's exactly the same as last year. And then we open up the document and see it hasn't been updated since 2009. So before sending that current year internal control documentation to your auditor, please perform a detailed review of it. That can save all of us a little bit of time. And keep in mind any staff turnover that may have happened during the year, any new computer programs or software, and any new processes or changes in the organization's environment. One example of something we saw frequently was during the COVID pandemic. A lot of internal control documents were returned to us with that common response of, oh, it's the same as last year. And those documents failed to reflect changes in the entity's processes as employees were working from home and the organization may have transitioned to a remote working environment. So those are just some things to keep in mind. Those detailed control documents are really helpful for us in the audit. Next, your auditor will request that a fully adjusted trial balance is provided prior to the start of the audit. Late adjustments can impact the audit plan, which can mean more work for you and more work for the audit team down the road. Take a little extra time to review that your trial balance is complete before sending it over to the audit team. I know Tyler kind of already touched on this, but having that year-end close checklist is something we recommend frequently. And that can be really helpful in making sure that you're providing a complete trial balance to your auditor each year. This also kind of leads into that next bullet point of making sure transactions are recognized in the correct period. Do a quick review at year end, and then that year end checklist can really help to remind you of anything that might be missing, whether it's the last month of depreciation, or maybe employee vacation accruals need to be updated at year end, or inventory needs to be adjusted. So just circle back to kind of that year-end checklist and really make sure your trial balance is complete and fully adjusted before sending it over to your auditor. A huge time saver in the audit can also be in performing a quick self-review of any documents or schedules that you're sending over to your auditor. If maybe you're a controller and you're having your accounts payable specialist or another employee help pull reports, take a quick glance at those reports before they're sent to the auditor. A key point of emphasis is to make sure those reports reconcile to the trial balance. It's surprising how often we see that this is not the case. A lot of times we won't even start our testing of some of the schedules until it's reconciled to the trial balance. So if we have to go back and forth with a client multiple times before we have a report that reconciles, that's delaying some of our audit testing and can mean some delays for the audit. A few other things to keep in mind is, are those reports complete, and are there any major or new transactions that aren't accounted for? So just take a glance at those. We like to call it a smell test, where you kind of look and see, is anything missing? Does everything kind of make sense? Is all the key information there? And then related to any new transactions, please keep in mind any new accounting standards applicable to your organization and communicate those to your auditor if you're aware of any. And continuing, we just have a couple more common pitfalls that we see frequently. The first on this slide is in providing incomplete responses or documentation for audit requests. This is a big one. As auditors, we try to be really clear in the information that we're requesting from you, but occasionally some information is lost in translation. One example is that we'll typically request invoices and check copies for certain expenses or payables, and more often than not, we just receive either just the invoices or just the check copies and not both as we requested. If we're asking for both, usually there's a reason why we need both those invoices and those check copies. And then this is my favorite example, and it happens more often than you might think, is when we request supporting documentation for like a sample of general ledger transactions. And as a response for supporting documentation, we receive a screenshot of the general ledger with those transactions highlighted. So the general ledger isn't really helpful for us in determining whether those transactions are properly recorded. We're usually looking for that underlying source documentation, whether it's contracts, invoices, check copies, receipts. We need the source documentation that kind of led to those transactions being recorded in the general ledger. So please just remember to read those audit requests carefully. If you're not sure what your auditor is asking for, if you're not sure why they need something, feel free to ask clarifying questions. We're happy to help make sure everyone's kind of on the same page with what's being requested. The next bullet point kind of relates back to our best practice of proactive communication. Surprise accounting issues identified late in the audit can delay the final audit report. These types of transactions are usually no problem when they're identified and communicated early, but if they're identified late into the audit, that's not a fun surprise for any of us. And then I'm going to go ahead and group together the last couple pitfalls on this slide as they're somewhat related. We're aware that completing the audit can be very time consuming on your end and on ours. During the planning phase, please make sure that employees who are responsible for helping provide audit responses will have ample time to respond to those audit requests. As Tyler mentioned, don't forget to keep in mind holidays and PTO plans, as well as any other workload commitments those employees may have. So maybe these same employees responding to audit requests are processing month-end payroll. Keep some of those deadlines and timelines in mind too as we're scheduling the audit. We know that occasionally emergencies and some unusual circumstances can and do arise, and we really try to be flexible when those situations come up. But the sooner you let your auditor know about changes in availability or deadlines, the better for all of us. Alrighty, so that is some of our best practices and common pitfalls that we see frequently during audit processes. So transitioning on, now you've received the final audit report, what's next? Let's talk about some key steps following the audit. After your audit, I'm sure the last thing on your mind is scheduling yet another meeting with or check-in with your auditor. However, this meeting can be a huge benefit for any future audits. But before scheduling that follow-up meeting with your auditor, I would recommend checking in with your staff and the employees who helped and were part of the audit process. I would ask if any parts of the audit were particularly frustrating or time-consuming for employees. Maybe there are some additional opportunities to delegate tasks to other employees next year. Keep notes during these discussions so that we can refer back to them next year. And then don't forget to thank your staff for all of their extra efforts during the audit. We know it can be a lot of work for all parties. After meeting with your staff, I would have that kind of debrief meeting with your auditor and discuss the success or maybe lack of success in following that initial kind of planned audit timeline. Were deadlines met? Does the timeline need to change for next year? It's helpful a lot of times to talk about those right after the audit when everything is still fresh in your mind. I would also discuss any of those frustrations or inefficiencies that arose with that conversation with your employees. Maybe there's something we can work together to do better next year to help eliminate some of these inefficiencies and frustrations on our end or on yours. Again, hopefully there are no frustrations with the audit, but if anything comes up, let's have a chat about those. The conclusion of the audit is also a great time to kind of review your organization's internal control processes and then make any changes that may benefit your organization or strengthen your internal controls. As auditors, we see quite a few different organizations in a year, and we do really try to give organizations ideas on ways to improve their processes and controls at the conclusion of the audit. It's up to your organization as to whether you actually want to implement any of your auditor's suggestions. But if you're unsure why your auditor is recommending something, feel free to ask, even if it's well after the audit. Maybe you don't have a chance to revisit your internal control processes until 6 months after the audit, and now you're kind of confused about some of those auditor suggestions. Feel free to reach out, even if it's not like in the middle of that typical time when you're communicating with us frequently. And at that point, hopefully all of your internal control documents are still handy since you just provided them for the audit. Hopefully they're handy right at the top of your inbox. When process changes are made, I would please don't forget to communicate those to staff, schedule any trainings that may need to occur. And then after the change is made, schedule some check-ins to make sure that those changes are having the desired effect and are operating smoothly for all staff, and that no kind of later tweaks need to be made to some of those changes that were made. Last, I would consider audit continuance. So after the audit's done, management should probably meet with the board of directors and discuss whether the current audit firm is still fulfilling the needs of the organization and is still a good fit to perform the audit in future years. I would keep in mind any quality concerns, any changes in independence, or maybe any changes in the organization's needs. We understand that audit season may not be the happiest or most relaxing time of year for your accounting and finance personnel, but we really do strive to make the audit a collaborative and efficient process for all parties. We hope that the audit adds value to and improves your organization. Feel free to communicate to your auditor any ways in which the audit can better meet your organization's needs, and keep in mind that you also have a key role in a successful audit. And with that, I will go ahead and turn it on over to Aaron to conclude today's session. Thanks.
All right, thank you, Brooke. Thank you, Tyler. Hopefully everyone enjoyed the session. We're finishing a few minutes early, give you a little bit of your lunch hour back. Just in closing, again, I'd like to thank Brooke and Tyler for sharing their expertise. A big thank you to all of our attendees who joined us today and submitted some great questions. Also, please don't hesitate to reach out if you had any questions that we, for whatever reason, didn't have time to address during the chat. Thank you again for your time, and have a great weekend, everybody. Thank you.